whether it be the collapse of the European banking system, or there's no president in the White House, nobody knows what to do. Something is going to snap fairly soon, and we're just going to wake up one day, and the dollar index is going to be down 10%. And everyone's going to be like, oh, crap.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, it's exciting as I'm traveling down on my way down to Texas. I'm in Philadelphia talking to Rafi Farber in Israel. And it's nice that the coverage of the COMEX is becoming a worldwide phenomenon these days. And then throw in unending QE, election, all the other circus. So it's exciting to have you here today, Rafi. And we're going to dig into that in a second. Real quick before we get started, I would like to mention today's episode is brought to you by First Majestic Silver. Proud to be wearing my First Majestic Silver polo shirt today. And certainly if you're a fan of silver, if you think the price is going to rise, First Majestic, a company you want to take a look at. Quick look on the day. With silver up about 40 cents, First Majestic up almost 2%. So, folks, check out First Majestic. And with that said, Rafi, it's a pleasure to have you on in here today. How's everything going with you?
Things are going well with at least my investment strategy. Going well with my subscribers at the Endgame Investor. And But Israel is one of the only countries now in a national lockdown, and it's been very difficult to live like a human being because it's like governments all over the world have declared war against normal human life, and very few people realize that that's what's happening.
Yeah, I actually had Lior Gans on the show last week. He said you're allowed to go 0.6 of a mile away from your house. Is that the policy where you are too?
Well, yeah, it's a kilometer, 0.6 of a mile. I think they're lightening it up, but still, I have 5 kids, two very young children, and they can't go back to school until January, which it's driving people's mental state totally bananas, and it cuts you off from your head. It's very difficult, and you have to be mentally strong to be able to handle this.
Yeah, well, on the positive side, I don't know if your school system is much different than here in the U.S., but I would imagine for your children's benefit, spending a couple months with a great research analyst and investor like yourself, as opposed to at least going to a U.S. socialist school, really increasing their future earning potential, confidence, and everything else. So, in either case, I'm sure hang in there. Hope they don't drive you nuts. But
that is one thing that has been very positive. I've always been pro homeschooling, and now it's forced on me. I've got to do it. It's either that or nothing. And things are moving forward, thank God. And I have a little story about First Majestic Silver, actually.
Sure.
Since they're sponsoring this episode, so for maybe the last 3 or 4 years. I've been encouraging my kids to, return bottles at the grocery store and collect, a shekel here, a dollar here, whatever the currency. It's all the same garbage. But, they've been collecting shekels, collecting money, saving it up. And then when March hit, right, and then gold and silver tanked, I'm like, kids, listen, this is like your last opportunity to buy silver, like really, really cheap. So like, give me your chores money and your bottom money, and and I'll buy you some silver. And like, yeah, let's do that. So like I went to the First Majestic store, their online store, and I bought them $300 worth of silver with all of their cleaning money for the past 2 years. And they got it. We got it just in time.
That's actually pretty awesome. Children getting involved in silver. They're already out investing. Anyone from the Fed, Ben Bernanke, Hank Paulson. Actually, Rafi, I believe... Based on what you just said, it seems like they were farther ahead of the curve because they were buying First Majestic before Warren Buffett was buying Barrick Gold. So again, normally I wait till the end, but if you want to be ahead of Warren Buffett when it comes to gold, again, link below, but there's the Endgame Investor, Austrolib. I love this, lean libertarian, fan of the Austrian school. Rafi, the Austrian School of Economics, life-changing to me. I mean, it's not just a theory, but when you really see how it applies, I mean, it's where to begin, but why don't you take it from there?
Well, I mean, it totally rewires your brain in a very fundamental way. I mean, this is a story I've told to Rob Kientz, but I have clear memories of when I was a kid and asking my father why prices always go up. It never made sense to me, even as like a 5, 6, 7-year-old. I was thinking, well, if they always go up every year and everything's just more expensive, like eventually, you know, as my childish brain reasoned, everything's going to be $1 million. And that's essentially true. You cannot have an economy where prices are always rising. It doesn't make any fundamental sense. What makes sense is that as you advance as a society, you produce more goods and services, and then the prices of those goods and services fall, and more people can afford them, and that brings people out of poverty. Prices falling makes sense. Prices rising can make sense in certain instances, like a war or, you know, a drop in production from some kind of event. But generally, prices should not rise year after year. And once I came into contact with Ron Paul, and I saw that someone was actually saying these things, and then all of a sudden, all the BS that I heard as, you know, a teenager in high school about economics and politics, it all just kind of fell away. And I was introduced to real economics, and it just made logical sense. And, you know, as a student of the Talmud, and, you know, I've been to yeshiva and Jewish schools, you know, it's a very didactic, logical literature, law literature, and it just made sense to that part of my mind, and it just took over. And I have to continue this and invest accordingly and learn, which is what I did.
Although, Rafi, I'm a little confused because Jerome Powell said he's very concerned about the low inflation, and could a central banker be wrong? And maybe that's at the heart of it, where the Austrian school is saying not only are they wrong, they're either lying or completely clueless. What would you say to someone who's been hearing all this Federal Reserve Keynesian jargon all these years where, hey, when the economy is weak or when COVID comes, just print up. I mean, we're firing off trillion-dollar chunks at a pop here. How would you put that in perspective for folks?
Well, I think of it this way. If you were to talk to somebody 2 generations before, let's say the greatest generation, World War II, or a generation before that, say your grandparents, if you knew them, or your great-grandparents, talk to them and ask them, does money grow on trees? Okay, that's a saying that just makes sense. You cannot print paper and expect it to make people richer. You know, the point of the saying money doesn't grow on trees is that you cannot take out of the system without putting into it first. You have to work. You know, life is about work. It is about adding value. It's about participating in society. Once you start printing money as a policy measure, then there really is no end to it. It's just like an addict, just like a drug addict in that kind of lifestyle. You start out once, it's nice, and then you take more doses, and it just goes up and up and up, and all of a sudden you can't stop. That's what printing money is. It's the drug of believing that you can add value to society without actually doing anything. And it's a very attractive thought for many people who don't want to work. And if you dress it up in these intellectualizing sophistry with, you know, doctorate PhDs and with all these equations, then the people who don't think about these things are like, oh, you know, they got the equation, they haven't figured it out, so we don't have to worry about it. Just print the money, and yeah, but it's going to end, and it's going to end badly. And the thing is, up to around March, I've known this, but it's never really hit in terms of how bad things are going to get. It's always been like this distant notion in my mind. Yeah, things are going to get bad, and, you know, I'll be okay because I have gold and silver, which I do, thank God. But then this COVID thing hit, and then you see the culture of how everybody just, you know, these sound bites on Twitter and social media. I'm convinced that this is a social media virus, and that no pandemic in the history of the world has ever been handled this way, where you lock down everybody and arrest them in their homes. But this is part of it. This is part of the culture of printing money. You can print money without consequences. You can lock everybody in their houses without consequences, and everyone will be fine and just go on with their lives. Many will, but many are going to be hurt by this irreversibly. And it's the same fairy tale fantasy thinking that's causing both things, both money printing and COVID. It's all related.
Yeah, well, that's, pretty much how it goes. And the Whoppers, they've been selling us for a couple of decades. Although, Rafi, what I appreciate that one of your areas of specialty, I know there's a couple of them, but you've written a bunch of great articles about the COMEX, what's happening there, which, a bit of a black box, even if you're digging in, let alone if you're just an average guy who knows nothing about this. Although, to set this up, everything that you just mentioned about how the money keeps getting printed, there's never a good time to undo it. These guys talked about how strong the economy was for the last 10 years, but they didn't pay off any debt. They didn't unprint the money. And if you're not going to do it when it's strong, now Jerome Powell's made clear that they're not going to do it when it's weak. So normally when you have this, credit's being expanded, people buy gold and silver. Then you throw in a COMEX system where you can create much more paper gold and silver that is out there. I've been of the school of thought that this is a beach ball being stuffed further and further underwater, and I don't know when it will end, but if there's some way this is going to end differently than that final scene of It's a Wonderful Life, where everybody's looking for the same thing that's not there at the same time, if there's a different ending, I can't figure it out. But what are you seeing there, and what is happening? Where we stand on that?
Well, with the COMEX, there's two specific things that I'm watching very closely. The first is the other reportables. It's a category of traders. They're very, I wouldn't say shady, but they're very anonymous. Nobody knows who these people are. They're wealthy family offices, billionaires all around the world. Nobody knows exactly what countries they come from. But they trade on the COMEX through Globex, which only the super wealthy have access to, or institutional funds. That's one thing. And why that's important is that until around March, and you could argue a little bit in 2019 when the repo rate started going out of control and the Fed started expanding their balance sheet again around September 2019, but really around March it really started getting serious. Around then, this category of other reportables started going into the COMEX. Until then, it was really the bullion banks selling the contracts, right? Most of them unbacked through their unallocated fractional reserve gold held wherever it is. Let's say the COMEX, London, it doesn't really matter where it's held as long as it's somewhere. It was them, the bullion banks versus the money managers, managed money. That was really the war that was going on. So what would happen is that if the money managers, the hedge funds, mostly in Connecticut, if they wanted to speculate on gold, they would buy some futures, right? And then the swaps of the bullion banks like J.P. Morgan and Morgan Stanley, they would sell the contracts. Right? Easy. So you sell the contracts, and it's backed notionally by gold in London or gold in New York, mostly London, and the bullion banks would keep selling those contracts until the money managers were all full and all satiated with as much contract as they wanted, and then the bullion banks would sell a little bit more just to knock the price down, and then the money managers would run away, and then the bullion banks would cover, and this would happen over and over and over again. I'm not one of those newsletter writers that complains about this and calls it manipulation. Things are what they are, and you have to deal with them, and that's it. I'm not going to make any excuses. But what's changed since March on the COMEX, and why the other reportables are so important right now, is that specifically, in Hebrew we say dafka in March, specifically in March, this category of traders went to a record high long position. I think it was around 130,000 contracts or something. And that was at the gold bottom, right? At that panic selling point when gold stocks touched their lows, their 2015 lows, their gold bear market lows of 4 years ago, and I was buying furiously, I had heart palpitations, but I knew that we had to do this, and I did. So now, since then, it's the other reportables that are overtaking the managed money category in the number of long futures. Now, the difference between them is that the other reportables are not hedge funds, and hedge funds do not take delivery. They're managing other people's money. They're not going to divide a gold bar into 1,000 pieces and distribute it among their clients. It's not going to happen. But the other reportables are trading for their own accounts, and these are the ones that are calling for delivery, and these are the ones that are long against the bullion banks. So the war, basically, on the COMEX has changed. It used to be the bullion banks versus the money managers. Now it is the bullion banks versus the other reportables, and the other reportables are calling for delivery, and if they keep doing that, they will win.
Yeah, well, I appreciate you mentioning that. I'll pull up the COMEX report. Although, Rafi, one of the things that I've wondered about, I know other people, it's like we see these delivery numbers, does not appear as if metal is leaving the building, but it sounds like you're saying that rather than just the tech funds, the hedge funds, we're talking about someone who's not trading, well, the moving average went this and that. Seems like a more fundamental long-term position, and when they're taking delivery, less likely to let that metal out. Is that right? Right, yeah, that's true. I've also noticed that the daily figures in the COMEX vaults, there's metal moving, but there is no net drain yet. Now that might change in December. Black Friday this year, November, the beginning of the holiday shopping season, that coincides with the gold delivery day for the active December month, and I think there's like 450,000 contracts open now. I don't know exactly what's going to happen then, but we have so many things converging on that time. We have a potential no-deal Brexit, which could bring the European banking system down. We have the gold deliveries. We have could be in a post-election mess or some kind of court fight and riots in the streets from Black Lives Matter and the Proud Boys on the other side. I don't know what's going to happen in America. I haven't been there in a while. But yeah, I mean, we'll see what happens in December with the actual deliveries. The other thing that I've been watching on COMEX, which is I'm not sure has ever happened before. I don't have the data going back to the 1970s or 80s or anything like that. But what I have noticed is that since around September, since last month, we've been seeing contracts being bought and opened on the spot month, meaning on the active month for immediate delivery. We've been seeing new contracts opened on the spot month in September and in October and delivered, at least according to their statistics, a day or two later. So meaning people are using COMEX as a delivery mechanism specifically, not speculating on futures, but buying spot gold and taking ownership of it in the same a day later. That I don't think we've ever seen before. Yeah, and can you touch on that? We've heard a couple people talk about that where it's become a delivery mechanism, which was not always the case. Could you elaborate and explain what that means, what the change is for folks?
Sure. I noticed this in September, and Rob Kientz also noticed it. But every day on the COMEX, you have numbers published for the daily figures. Right? You have a change in open interest. Open interest is the number of contracts that are open. Right? So if somebody's betting short, somebody's betting long, that contract is open. It can be closed by a delivery or a cash settlement or a rolling over. Now, you can roll over any gold contract except for spot. Spot you cannot roll over into a future. If you buy a spot contract, you have to either take delivery or cash settle. Now, what I've been noticing is that on the spot month, you have the number of deliveries that are reported every day, and then the change in open interest. So really, the change in open interest should be at least equal to the number of deliveries for that day. Because if you're delivering, those contracts are closed out, and that the open interest falls by that amount. So if there's 10 deliveries, you should have a negative 10 minimum number of open interest. You could have negative 12, negative 20 if 10 more contracts are closed by settling for cash. That can happen. What's been happening almost every single day since September started is that you have a certain number of deliveries, let's say 20, and then open interest either declining by less than 20 or even climbing. And the biggest number I've seen, I think was a few days ago in October, maybe October 9th, October 10th, I don't remember exactly, but there were something like 2,000, like maybe 100 deliveries and maybe 2,000, and open interest contracts rising by about 2,000. It was something like that. It was over 1,000, which means that over 1,000 spot contracts were bought that day and then delivered. And that's a lot of tons of gold to be bought on spot and then delivered the next day. And deliveries happened. I counted them. They're on the delivery sheets.
Yeah, that is a lot. Although, speaking of large deliveries, something I've been keeping an eye on and have been mind blown. It's been actually really helpful reading some of your articles. Let me pull this up here. Is watching what's happening in platinum and palladium. And it's funny, I guess I hadn't checked this in a couple of weeks, because throughout the year, here we have the platinum futures on the NYMEX, non-delivery month 23, then 430 delivery. You have under 100, then delivery months 400, then July jumps to 4,000, then a little bit quiet August and September. I hadn't seen this yet. The October is already, we're still got a couple days to. What's that?
Yeah, 5,684. Yeah.
And another thing that you've written about quite a bit, if we go back up here to palladium, another shocking number. I didn't look, because again, we have 84, 20, 0, 41, 25, 24. Remember back in June, I'm thinking, wow, that 203, 10x over a non-delivery. But then here we have 570 in September. Obviously, we've seen fireworks in palladium throughout the last couple of years. Some people wonder, is palladium going to be the spark where there's a failure to deliver? What is going on with platinum and palladium here?
The truth is, I really don't know, other than it seems like somebody's trying to squeeze them. Because platinum and palladium are used mainly for manufacturing catalytic converters, and car manufacturing is way down. It was even falling at the end of 2019, and especially given the lockdowns and the shutdowns and the supply chains that are having problems. Yeah, you don't need all this palladium all of a sudden. Why is it all being delivered? What is going on? It's the thinnest market in precious metals in the COMEX, and it seems that some group of people are calling for delivery. I don't know what they're doing with this stuff, but this is not. I mean, it's a phenomenon across all precious metals. I mean, that's what we're seeing. So we're seeing I think it's a fundamental distrust of the COMEX, and we'll have to see what happens to these physical bars. I don't know what they're doing with them. It's something that has never been seen before.
Yeah, I agree. It's kind of funny. This is based on nothing except just something that popped into my head as you were saying this, where it's like, based on the things you've heard Vladimir Putin say, wouldn't it fit the profile if he's like, he makes clear he doesn't like the U.S., the dollar hegemony. Again, that is not based. But it's like you see these other countries that are tired of getting bullied around. This stuff, it's not rocket science, especially if someone can go to your page where you explain it for them. And you'd have to, I had Andrew Maguire on last week, says China is now buying silver. I'm almost surprised, like, what is taking these guys this long to figure it out? It seems kind of obvious to me. But, Rafi, the final question I have for you today, is this just going to keep going until, is there going to be some sort of failure on the COMEX? I know I get people from time to time who think, hey, everything's in balance, there's no issue here. Is this a looming, forget the mechanics or what they call or how it goes, but are we going to run into the point where someone shows up, wants their piece of metal, and it's just not there?
It could be that way. That could happen. I would hesitate to say that it's definitely going to happen, because I don't know if it is going to. But whether it does or doesn't, the demand for gold and silver and platinum and palladium are going to go higher as in monetary or pseudo-monetary metals. We simply see that in the delivery numbers. Whether they can deliver them all or not, maybe they can, maybe they can't. But the numbers themselves are showing you that somebody or a group of people is trying to squeeze them and trying to get these bars. What happens next? I don't know, but we want to get in front of it. as quickly as we can, because one day, whether it be the collapse of the European banking system, or there's no president in the White House, nobody knows what to do, something is going to snap fairly soon, and we're just going to wake up one day, and the dollar index is going to be down 10%, and everyone's going to be like, "Oh, crap!" Everyone's going to know in the pit of their stomach what this means. They're going to know, no matter what side they've been on, whether you're Paul Krugman or Ron Paul. Everybody's going to know what it is.
Rafi, come on now. You're saying we're going to see an event that big that even Krugman will get it? I mean, let's keep it.
I don't know if he'll admit it. But in the pit of his stomach, he's going to feel fear and a little bit of guilt, I hope. But really, it's about protecting your family now. It's an academic discussion whether COMEX is going to fall or not. One thing I would caution against saying that definitely will is that in March, when gold was falling, and the nature of markets being that they tend to clear if people are allowed to make their own decisions, that in March we had a record import of gold through JFK of all time. Now, when a currency is falling, when a currency is in collapse, you will start seeing people chase after gold, silver, anything that holds its value, and you will start to see those import numbers of gold and silver into that country rise. So as a currency is collapsing, you will see a corresponding counterweight in the market where you'll see an import of gold, because that's what people do when they're fleeing their paper currency. They will import gold. So in March, as we saw the dollar price of gold falling, the imports of gold into the United States was spiking, which means that the dollar relative to gold, the dollar in real purchasing terms relative to gold was falling, even though the dollar price was also falling. But in terms of real assets, gold was gaining very nicely during those panic days, which is how I knew that we have to get in now. And we see similar things happening now with this correction, not as extreme, but we see increasing other reportables taking positions. We see gold falling less than other commodities. We're seeing similar stuff, and there could be one more major plunge. Could be, maybe not, but we have to be prepared either way. Enough cash on hand to buy the dip if it happens, and enough positions now to be satisfied and to be protected if it doesn't. And if you can protect both sides of that equation, you should succeed.
Well, Rafi, that makes a lot of sense. And since, I don't know, I think you've clearly demonstrated a solid understanding of the gold market. Before we wrap up, I'm going to ask you one favor. Maybe sometime around the election.
But let me just end by saying that nobody really understands gold prices, and I don't pretend to really understand them either.
Thank you. Mr. Chairman,
I love how they giggle at the end. Rafi, perhaps just in wrapping up, you could be the one to explain it, what Ben Bernanke and the other central bankers can't figure out. Would you be kind enough to let Ben and everybody else know where your website is, where they can find your research, so that they want to be ahead of this rather than find out after the train has cleared through the tracks, how they can do that?
Definitely. My service on Seeking Alpha is called The End Game Investor, investing in the end game. If you Google that, you'll find it. And my username on, my author name, my pen name on Seeking Alpha is Austrolib, as an Austrian School of Economics, Austrolib, Austro-Libertarian. You can find my daily newsletter there. I send out a daily report and a more elucidated weekend report where we cover the COMEX, cover the precious metals, cover stocks. And it's fun. It's a fun community of like-minded people, which you can really use for your own mind these days in these dystopian, post-apocalyptic, middle-apocalyptic days where everybody's locked down and social lives are under attack. It's helped. It's helped me. It's helped my subscribers. It's been a great time. I really enjoy it.
Well, I sure appreciate that. I've appreciated reading your research. And just, I'm going to toss one in the pot here today. $230 up front for the year. If anyone can track down Ben Bernanke on behalf of Arcadia, I will pay the $230 so you could explain gold to him. Maybe it's ironic when you look at all the wars that are funded with money printing and these Keynesian exercises. Maybe your newsletter could even bring peace to the Middle East, amongst other things. I gotta mix one last.
You know what's brought peace to the Middle East?
What's that?
Lockdowns.
Well,
nobody's fighting anymore. Everybody's under house arrest.
Yeah, well, just one last thought before we wrap up. Here was a headline today. Fed official who could be Biden's Treasury Secretary. Rafi, if you want to brave it back here, you get my vote for Fed Chairman Biden or anyone's Treasury Secretary. What you're saying makes a lot more sense than any of these guys. So really appreciate all that you're doing, all that you stand for, and making some time to join me here today. I think people are going to appreciate this.
Thank you very much, Chris. It was great to be here.